Accounting for dividends. The decision to pay cash dividends rests with the board of directors and involves more than evaluating the amounts of retained earnings in cash. The directors, for instance, might decide to keep cash to invest in the corporation's growth, to meet emergencies, or take advantage of unexpected opportunities, or even to pay off debt. So the decision rests with the board of directors as to when and if they declare dividends. There are a couple different types of dividends, major categories of dividends. Those are cash dividends, which dividends paid in cash, or stock dividends, which are distribution of shares of additional shares of stock to the stockholders. Declaring a dividend does two things. It reduces the retained earnings of the corporation, and it also creates a liability. So when the corporation declares a dividend, it immediately becomes a liability that must be paid out at the specified date. Again, the corporation's board of directors is not required to declare a dividend. Cash dividends are cash distributions of earnings by a corporation to its shareholders. There have to be three conditions met in order for the corporation to be able to declare a dividend. First of all, there has to be enough retained earnings in the corporation. There also has to be enough cash. And then finally, the board of directors has to formally declare the dividend. There are three important dates having to do with dividends. So the first is the date of declaration. That's the date the board formally authorizes the payment of the dividend. So they vote to declare and pay a dividend, and that creates a legal liability of the corporation to its stockholders. Then there's the date of record. That's the date used to determine which stockholders will receive the dividend. Because with shares of stock, investors are buying and selling shares of stock on a daily basis. So the board has to determine a specific date where they will look at the records, and whichever stockholders are on record as of that day owning shares of stock in the corporation, those are the ones who will receive dividends. And then finally, the date of payment is the date when the corporation makes the payment. Declaration date. When the board formally authorizes the dividend, the company has a legal responsibility to pay it. So they have to record the liability on the date of declaration. So the liability is recorded in an account called cash dividends payable. So for instance, on October 1st, Hyber Corporation declares total dividends of $42,500 and records the following journal entry. So this is taking place on October 1st. This is the declaration date, which means that a liability is incurred. Remember the other thing, two things happen on the declaration date. A liability is recorded, but then retained earnings is also decreased. That is the flip side of the journal entry. Dividends reduce retained earnings, so you debit retained earnings. And credit cash dividends payable. For the amount of $42,500. So note that there is no cash affected at this point because we're not to the payment date yet. This is simply just recording the liability. The date of record. So this date determines which stockholders will receive the dividends. That's the date that you as a stockholder have to be in the company's records to receive the declared dividend. There is no journal entry here because there's not an actual transaction taking place on this date. This is just simply a predetermined date where the records of the company will be looked at to determine who are stockholders as of that date, and those are specified as the ones to receive a dividend. The date of payment. This is when the cash dividend will actually be paid out. So the company will record a journal entry to decrease the cash that's being paid out, and also to take the liability of the dividends payable off the books. So on December 2nd, the date of payment, Hybrid Corporation records the payment of the dividends as follows. So it's December 2nd. The liability is being decreased, so debit cash dividends payable. Cash is being paid out, so credit cash, and the amount is $42,500.